Good afternoon, class. This is Demetrius Wilson, or good morning or good night, just depends on when you're watching the actual lecture. We're going to go over Chapter 4, How is Process Costing Used to Track Production Cost? Not as many slides as Chapter 3, but plenty enough to have a good understanding of this portion of managerial accounting. So we want to compare and contrast job costing and process costing. Right, so two of the main topics we begin to talk about as early as chapter 1. A job is something that's specific and unique, like an airplane or a custom house, and a process is something that's fully identifiable, identical, like making Coca-Cola or Pepsi or oil or milk over and over again. So what is process costing system or a process costing system? A system of tracking product costs used by companies that produce similar or identical units or of a product in batches employing a consistent process. Keyword being a consistent process. Some examples of companies that use process costing: Chevron Corporation for petroleum products, a Wrigley Company at chewing gum, and a Coca-Cola Company for the beverages that they produce. How does process costing compare to job costing? Similar to job costing, process costing uses three inventory accounts to track product costs. Raw materials inventory, what are the raw materials that have come in, we purchased them or harvested them, and the work in process inventory, and finished goods inventory. So work in process is things that have not yet been completed, and finished goods inventory are things that have been completed but not yet sold. So unlike job costing, process costing uses several work in process inventory accounts. So job costing doesn't use several, but process costing does. Each production department typically has one work in process inventory account. The sum of all work in process inventory accounts represents the total work in process for the company. And we'll go through the actual breakdown involving the numbers throughout the lecture. Process costing uses a departmental production cost report to track production costs. So here's a very good diagram of the summary of cost flows. So job costing right up here at the top. So job costing cost flows shows direct materials, direct labor, manufacturing overhead applied. Goes to work in process inventory. Job cost sheets are used to track work in process inventory by job. Goes to finished goods inventory, and then it goes to cost of goods sold. So remember, it's finished, not yet sold, still shown as an asset, but then it's actually shown as a cost or money going out of the company when it's sold, just cost of the goods sold. Now, it's a little different when you look at process cost and cost flow. So you still have the same, these two mirror each other, direct materials, direct labor, and manufacturing overhead apply. But then when you go to your work in process inventory for your different department, it splits, right? So you have work in process inventory department A, work in process inventory department B, and work in process inventory department C. All three split apart. And then it goes to the finished goods inventory. So when you think about it, it could be various processes that you go through in this process costing in order to come out with the final product. And it goes to finished goods inventory and cost of goods sold. So you see these two mirror as well. The only difference is right here in the middle. So identify how product costs flow through accounts using process costing. So how do product costs flow through accounts in a process costing system? Products or costs are tracked by department rather than by job, right? So each department is going to reflect a certain amount of money, a certain amount of time, labor, and efforts in regards to completing, fixing, producing the final product. This means direct materials, direct labor, and manufacturing overhead are assigned to each processing department, such as assembly and finishing. So how are direct material costs recorded for each production department? When direct materials are requisitioned from the raw materials warehouse for two production departments, assembly and finishing, the following journal entry is made. So it looks like this. It goes from raw materials inventory to work in process inventory assembly. And then it goes from raw materials to work in process inventory finishing, right? Both mirror the same thing that happens. It comes from a raw materials inventory, but this one goes to finishing and this one goes to assembly. But we'll also show when it comes from assembly to go to finishing. Not in this example, but it's coming up. Notice that two different work in process inventory accounts are used to track production costs, one for each department. So how are direct labor costs recorded for each production department? When direct labor costs are incurred for the two production departments, assembly and finishing, the following journal entry is made. Same thing, the only difference is the account that is coming out of is wages payable. So it comes out of wages payable to work in process inventory for assembly, and wages payable is going to those individuals completing the direct labor. Then wages payable goes from there and goes into work in process inventory for finishing, right? So those funds come out of wages payable and then they go into the work in process for that particular department. So how are manufacturing overhead costs recorded for each production department? When manufacturing overhead costs are applied to the two production departments, assembly and finishing, the following journal entry is made, and it looks like just like the prior two examples that I gave you. Manufacturing overhead goes from there to work in process inventory assembly. Manufacturing goes from there to work in process inventory finishing, right? Comes out of the account, whether it be manufacturing or any of the other two accounts, and it goes into work in process inventory for either finishing or assembly in this particular example. What are transferred in costs and how are these costs recorded for each production department? So costs associated with products moving from one department to another, right? So moving from assembly to finishing, that's what we'd be referring to. So when products are moved from the assembly department to the finishing department, which makes perfect sense, the following journal entry is made. Work in process inventory from assembly moves over to work in process inventory in finishing. So how do we record production costs for products moved from the final production department to finished goods warehouse, right? So we have a work in process inventory finishing, right? Finishing, that's a pretty descriptive name that indicates that things are pretty much getting finalized. Then it goes over to the finished goods inventory account, right? That means everything's been completed and it's ready to sell, ready to put it on the ship, the boat, the train, the automobile, the truck, and get it out there and have it be sold. So how do we record production costs for goods that have been sold? The following journal entry is made to record the costs associated with goods that have been sold. Like I just indicated, it moves from finished goods inventory over to cost of goods sold, because now it goes from being an assets finished goods inventory, right? It's still in house, still looks good, nice and shiny, to being sold to someone else, and hopefully they're satisfied with our product. So the flow of production costs in a processing costing system goes like this: direct materials, right, from raw materials, direct labor and manufacturing overhead comes up here to cost of units transferring to finishing, goes over here to cost of units transferred in from finishing, and then you have 1B down here, direct materials, direct labor, direct manufacturing, cost of units completed, finished goods inventory, cost of units completed, cost of units sold, and then under cost of units sold, it's cost of units sold only, right? So it's just kind of like the little flow that goes on from left to right. So understand the concept of an equivalent unit, and this is not a very hard concept to understand, but it will, at least if explained properly, but some people do have trouble grasping or understanding equivalent units. So what are equivalent units? When units of work in process inventory exist at the end of the reporting period, process costing requires that these partially completed units be converted to the equivalent completed unit. So for instance, if I have 10 halves, then they're going to say I have 5 wholes, right? That's just how equivalent units work as far as their calculation goes. So equivalent units equals the number of physical units, right? So if by example, that would be 10 times the percent completion, and it would be 50%, but we do 50% decimal form as 0.50, and then my equivalent units would be 5, just like I indicated. Direct materials, direct labor, and manufacturing overhead often enter the production process at different stages. Thus, equivalent unit calculations must be made separately for each of these costs, right? So if they're coming in at different points, then they're going to have to get different calculations for each one. So here's a good example. Pictures are always worth 1,000 words or more than 1,000 words. So if four identical tables are at 50% complete, what is the equivalent number of units? So before I even say the answer, just think in your head, look at the picture. What does it look like? What would it be, right? So we see we have four equivalent partially built tables, and we know they're all 50% complete. This is equivalent of having two fully completed tables, right? Only thing is missing is the space right there in between. So we count those as the same. So use four steps to assign cost to products using the weighted average method, right? And this is when it gets really interesting. So what is a weighted average method of assigning cost to inventory? This is a method of process costing that includes costs in beginning inventory and current period costs to establish an average cost per unit. So what is the average and how much on average does each unit cost? So four steps are used to assign costs to products using this method. So what are the four steps used to assign cost to products using the weighted average method? Step one, summarize the physical flow of units and compute the equivalent units for direct materials, direct labor, and overhead. Right? So you have to check the flow and see what happens with the equivalent units in regards to direct materials, direct labor, and overhead. So step two, summarize the cost to be accounted for, separated into direct materials, direct labor, and overhead, right? So what is actually attributing to cost? Step three, calculate the cost per equivalent unit, right? And that's something that we're actually going to do. Somewhat of a lot of steps involved in the process, but we'll try to figure out the problem as we go along and make it very understandable. Step four, use the cost per equivalent unit to assign costs to completed units transferred out and units in ending work in process inventory. We need to know how much we've sold. We also need to know how much we're currently holding. So you have to listen very, very carefully to this part because it gets a little tricky, and I'm going to flip-flop between a couple slides and you'll see why. So the company had 3,000 units in beginning work in process inventory. All were completed and transferred out during May. So remember that number, 3,000. All right, they're already completed, transferred out. During May, 6,000 units were started, and of the 6,000 units, 1,000 units were completed and transferred out to the finishing department. So we'll pause there, and we'll remember that 3,000 units were already in-house, 1,000 units were started in May, and then those were also transferred out. So we know that we have 4,000 units that are actually transferred out. So I'm going to go to a different slide, but we're going to come back to this one in a second. So it says summarize the physical flow of units and compute the equivalent units for direct materials, direct labor, and overhead. So when you look here, remember that number 4,000. This is how you do it. So units accounted for, units completed and transferred out. Well, we know that we completed 4,000 units and transferred those out. There's no change in that between direct materials, direct labor, and overhead because we completed them and we transferred them out. So 4,000 physical units, 4,000 direct material, 4,000 in regards to direct labor, and 4,000 in regards to overhead. Right? So now let's go back to this. And then it says 5,000 units were partially completed and remained in ending work in process inventory on May 31st. Right? So 5,000 is our new number. So we did our 4,000 line, and then we're going to go back to deal with our 5,000 line. But it says 5,000 in relation to 60% complete for direct materials. So it's not 5,000 that's complete, it's 5,000 times 0.60 or 60%. And then we have 5,000 times 30% complete for direct labor and also 30% complete for overhead. So when we go back up to here, oops, I think I went the wrong way, right? But now we're back. So when we go back to here, you see that we have our 5,000 units, right, that were partially completed, and we have our percentages, 60, 30, 30, all right? So you take 5,000, right, and if you don't trust my math, right, and you multiply 5,000 times 0.60, which will give you 3,000, right, 5,000 times 0.30, right, I'm sorry, 5,000 times 0.60, which is 60%, will give you 3,000. 5,000 times 0.30 what was it, 30%, I believe, 0.30 will give you 1,500 and 1,500, right? So you add these up, and we'll finish that off on at the beginning of section 2. So just remember our 4,000 and 5,000. We'll start back over, and we'll get the rest of that.